Stock prices continue to zigzag on Wall Street as investors swing back and forth between optimism and despair. Although experts say the U.S. economy is starting to stabilize, for some Americans, the world's largest economy often boils down to a price tag.
I don't want to spend more than $20 on a backpack.
Ariana may be too young to understand economics, but she's learning a lot on this shopping trip with Mom.
How about these? These are on sale.
The National Retail Federation says back-to-school sales are down nearly 8%, meaning the average family will spend $46 less than they did last year. Economist Diane Swong says that's one reason why investors are so worried.
We're still running at confidence levels that are consistent with the worst of the recessions of the early 1980s. Consumer spending is not there.
Consumer spending drives the U.S. economy. Mark Zandi, chief economist at moodyseconomy.com, says when consumer confidence declines, investors take notice.
25 years, really, going back to the early 80s, the U.S. consumer has powered growth here in the United States and really globally. It's powered growth everywhere across the globe. Consumers just aren't going to be able to do that going forward.
Zandi says that's because many lower and middle income Americans feel insecure about their jobs, and some are finding it harder to borrow. Zandi says even higher income Americans are not feeling as wealthy as they used to.
I think the U.S. consumer will do their part, spend just enough that we get growth and we're out of recession, but I don't think the U.S. consumer can lead the way. We're going to have to see consumers in the rest of the world, and particularly in emerging economies, step into that void and power the global economy.
Complicating the recovery, unemployment and the housing crisis. Nearly 250,000 jobs disappeared last month, and home foreclosures are at record highs, even though investment strategist Liz Ann Saunders says technically the recession is over.
We've had 3 consecutive months of rising leading indicators. That is an expansion signal for a lot of economists that say, okay, recession's over, we're now in recovery mode.
But the crisis is far from over. The Treasury Department says lending at U.S. banks that received bailout money declined for a 5th straight month, and unemployment is expected to reach double digits by next year. With the freewheeling days of easy credit and unbridled spending now just a memory, economists say the recovery is likely to be slow and gradual. That means the roller coaster on Wall Street continues. Arcega, VOA News.